My name is Farhan. This video will teach you how to solve a cash budget problem. This is question number 13 taken from 2022 paper 2 past exam. If you need help with any other topics, make sure to post them down in the comments. Also, check the links in the pinned comments. I'm offering multiple tutoring sessions throughout the entire month to help you ace your exams. With that being said, let's get started. Michael will start trading on 1 August 2022 introducing £18,500 of his own cash into the business. So, what we can understand by reading the first line is that Michael is very new into business and started the business with his own investment money of £18,500, which is also referred to as the opening capital. We are given some forecasts with regards to the first 2 months of operations, August 2022 and September 2022, for sales, purchases, and operating expenses. We are also given some additional information, and we are required to prepare the cash budget for Michael for the months of August 2022 and September 2022. So all the workings that we will need to do for solving this problem is on the right hand side of the screen. Let me explain you through each and every step. First of all, additional information number one says that 25% of sales will be on a cash basis with the remainder on a 1 month credit basis. Okay, so hold that thought and let's start with all the calculations that we need for sales. First of all, the total sales forecasted for August is given as £11,400, which you can see here as it's given here in the forecast. And we understand based on the requirements mentioned in the first additional information that 25% of these sales that we're making in August will be collected for in cash in the month of August. So cash collections in August would refer to the 25% which will be done on a cash basis. So 25% multiplied on the total sales of £11,400 gives us £2,850, which is what we're going to collect as cash in August. The remainder is going to be collected on a 1 month credit basis. So which means if 25% of the sales are collected in August, 75%, which is the remainder, will be collected in the next month, which in this case is September. So cash collections in September is therefore calculated as 75% multiplied on the August sales of £11,400, which gives us £8,550. So let me summarize everything for you. First of all, we took the August sales of £11,400 that's given in the table, and we understand that 25% of this total August sales will be collected in the month of August itself. So that's what we have done first. So cash collections in August, 25% multiplied by £11,400 should give you £2,850. We now also understand that the remainder will be collected on a 1 month credit basis, which means the remainder will be collected in September, which is the next month. So cash collections in September will be 75% of whatever sales we had in total for August, which is £11,400, and that gives us £8,550 to be collected in the month of September. Next, we are going to look into the sales for September. As given in the forecasts, the sales for September are £26,600. So that is what we are starting with, September sales being £26,600. We understand that 25% will be collected in the month of September itself. So let's calculate the cash collections in September, which is 25% multiplied by £26,600 being the total September sales, and that gives us £6,650 as the cash collections for September sales in September. Then, once we have figured all this out, so let's take you to the cash budget, and we're going to start by preparing the section for cash inflows, which or the cash receipts, the same thing. So cash receipts or the cash inflows, they're the same thing. And we have 2 months here, August and September. So ignore the opening capital for now. So let's focus on the sales to begin with. So we understand that whatever sales we have made in August, 25%, which is £2,850, are collected in the month of August itself. And The remainder 75% are collected in September, which is £8,550, based on the workings that we have done here on the right-hand side. Then we have the sales for the month of September. Whatever sales we have made in the month of September, we are going to be collecting 25% of that in the month of September itself, which is what we have figured out based on our calculations here. Honestly, the main thing that should play a key role in you getting this question fully correct is your focus. So make sure when you're solving this question in exam, you ensure you have included all the information properly and in the right order. So now you can see we have put all the August sales and the September sales here. I've also included opening capital of £80,500. So where did that opening capital come from? It's a part of a cash receipt in the sense that if you check the first line of the question, Michael, who started the business just recently, has invested this much of money into the business. So when this money is being invested into the business from the perspective of the business, this is like a cash receipt or a cash inflow. So that is why we're including this as 80,500 at the very beginning under cash receipts as well, which reflects a cash inflow. So once you have got all the cash receipts together, so then you find the total cash receipts for each month. So for August, we're only adding the opening capital and the sales that we're going to be collecting in August in terms of cash. And that gives us the total of £21,350. And for September, we're going to be collecting 75% of August sales and also 25% of the sales we make in September itself, which gives us £15,200 as the total cash receipts in September. Now we're going to be looking into cash disbursements or cash payments or cash purchases. So the only two items that we have in the question for cash outflow or cash payments are purchases and operating expenses. So let's start with the purchases first. Excuse me. So August purchases are forecasted at £18,000. As you can see, it's given here in the table. We understand, based on the requirement of the question, given in point number 2 of the additional information, that 60% of purchases will be on a cash basis and the remainder on credit. All right. So first of all, August purchases are £80,000 as we understand based on the forecasts on the table. And we also understand that 60% of these purchases will be paid for in cash in the month of August itself. So cash payments in August can be calculated by taking the 60% and multiplying it with the total August purchases of £80,000, which gives us £10,800 that we will be paying in cash for the month of August purchases, for the month of August and its purchases. Next, we understand that the remainder will be on a credit and trade payables will be paid in the month following purchase after taking a 5% early payment discount. Now, whatever purchases we are making in August, we are paying 60% of them in August, and the remainder will be paid in the next month, which is September. So the remainder is 40%, as we can understand, but we are also eligible for a 5% discount, which makes it only 35%. So the discount that we're receiving from the trade receivables as a business is what we call the discount received. And this is what we add as other income if you were to prepare an income statement. So in this case, whatever cash payments we are going to be making in September for all the purchases that we have made in August, that's only going to be calculated by taking 35% after accounting for the 5% discount that we have received and multiplying it on the total August purchases. So as you can see, cash payments in September is equal to 35% multiplied by the total August purchases, which are £6,300. Okay, so now that we have sorted everything for August, let's move on to September purchases. So the forecasts for September purchases are £20,200 as given in the table here. So based on that, we understand that cash payment in September, based on requirements also given in point number 2, is that we're paying 60% in the month of purchase itself. So 60% of 20,200 would be £12,120 that we will be paying in cash for September. And whatever is left, which is the remaining 35 or 40%, excluding the discount, would be going into October. But then again, October is not our concern for this question. So we could just simply stop here after finding the cash purchases that we'll be paying in September, which is the 60% calculation only. So you do not have to worry about what's happening next because the requirement of the question stops in September itself. Now, let's go to the cash budget section. So for the cash payments, so for August purchases, what I understand is that for all the purchases in August, we're paying 60% in cash, which is £10,800. That is what we have included here. And the remainder, £6,300, which accounts for the 35% that we will be paying in September after getting a 5% discount. Based on the calculations here, is £6,300 we have included here. Then for September purchases, whatever cash payment we will be making is only the 60%, and that is £12,120, as you can see I've included here. So these are the only three cash payments for the month of August and September. Now let's look into the section for operating expenses. It is very straightforward and says that whatever operating expenses the business will have, they will all be paid in the month they're incurred, which means operating expenses for August 2022 being 1,100 would simply mean that payment for operating expenses in terms of cash for the month of August 2022 is £1,100 based on what's given in the table in the question. And payment for operating expenses for the month of September is £1,200. Again, it's already given in the question. And based on the requirements, we understand that they're paid in the same month as they're incurred. So now that we have all the cash payments together, which are the payment made for purchases and the relevant operating expenses, we just add them up and we get the total for total cash payments. As you can see, we have got for both August and September 2022. Then, now that you have the total cash receipts for each of the 2 months and the total cash payments for each of the 2 months, you can see that I've kept the cash payments in negative within brackets because they're payments. I'm just referring to an outflow in this case. So you subtract the total of the cash payments from the total of the cash receipts. So once you do that, you get something what we call as net cash flow. So the difference between cash receipts and cash payments for the month of August 2022 is £9,450. And the difference between the total cash receipts and total cash payments for the month of September is negative £4,960, which means for the month of September, we are expecting a deficit in cash. Or in other words, you can also say something like that the month of September will have more cash outflow compared to cash inflow. Okay, so that is why we are keeping this in brackets, which refers to a negative or a deficit or an outflow. Then with the net cash flow, we're adding the opening balance. So the opening balance in this case, a lot of students would want to not include opening capital here on the cash receipts and then include it here, which is also technically correct, and you won't be losing any marks at all. So don't worry about it if you are to use that approach and you find yourself to be comfortable doing that. So in this case, the opening balance, we have to keep 0 because we have already included the opening capital as part of the cash receipts or the cash inflow. So once you add the opening balance with the net cash flow, you should get the closing balance of 9,450, which gets carried forward in the next financial year as the opening balance, logically. And then when you add that opening balance for September with the negative cash flow that we have for September, you should get £4,490 as the closing cash balance for September 2022. That's it for today's lesson.